We detected 22,978 options on Ford Motor. This happened on June 30, the last trading day, Friday. So in this video, we'll be analyzing what these unusual options mean to get an idea of where Ford stock price is headed. So without further ado, let's get right to it. September 15, 13 strike puts, 16 strike calls. You'll see that the call side here was being traded at the bid price, and the put side was being traded at the ask price. Okay. So when we look at the options chain, we'll see the 13 strike puts here. We'll also see that the volume is much greater than the open interest here. And also on the 16 strike calls, we'll also see that the volume is greater than the open interest. Okay, so we believe they are selling the 16 strike calls, taking that credit, buying some 13 strike puts. Okay, and when you analyze this trade, you'll see that this is a short position, and the break even is actually higher than its current price. Okay, so that's up to here, $16.29. So Ford at 15 and 12 cents can still move higher, and this short position would not lose money because this break even is higher than its current price. Okay, by selling the call, they are selling it out of the money. When they're doing something like the 16 strike calls, the buying power that requires is about $265 per contract. We have a video that shows you how you can find buying power requirement by selling calls or puts. Click on that if you want to know how to do it. And since it's $265 per trade, there was about 23,000. So this trade required about $6 million. So large investor who could have been hedging as well. Maybe they have stock and they wanted to sell some out the money calls as a covered call strategy, and then using some of that credit to buy a 13 strike put to hedge in case Ford drops down in price here on the x-axis, right? So they'll still be able to be profitable if it drops. They'll also be profitable if it goes up a little. So 16.3 is the break even here. Okay, so we look at the charts to understand this pricing action a little bit more. You'll see that Ford has been going up, overbought here, and when it was overbought, it pulled back, then went back up higher, and now we're also back into overbought territory. So possibly this large investor is anticipating another pullback that could potentially happen, and that's why they put on this $6 million trade. Okay, we'll see 16. Can zoom out a little bit more to see if the $16 level you'll see here is actually a 52-week high back on August 16, 2022, right over here. So it makes very good sense that their break even is right about around that range here, that $16 level here. Okay, so they're expecting some resistance here at the $16 level here, a little bit over $16, but and that's why this trade was done by this large investor because they did the extensive research here. Okay, and that's why when we analyze unusual options activity, our probability of accuracy is also going to be higher than just using technical analysis or fundamental analysis. So if this is something you're interested in, we do have other videos for other stocks as well, which helps you increase your probability of profitability by diversifying your portfolio. And also we show how we trade using different strategies based on these unusual options, because sometimes it requires more buying power, or the risk is too high, and we want to make sure the risk to reward ratio is in our favor. All right, and we monitor and watch the data on a daily basis to make adjustments to our trades as well. So we are very data driven, and that's part of the reason why this analysis works. Okay, so as usual, please smash that like button and comment below on what you think is going to happen to Ford. Is it going to pull back? Will it pull back even more? Maybe back to this level? Or will we continue to rally? What do you think? Please comment below. Very curious to know if anybody can guess this right. Take care, everybody. Good luck.